This conference will now be recorded.
Good evening, ladies and gentlemen. This is Real Estate Trading Frank on Sunday, 9:04 p.m. Eastern Standard Time. It is March 7th, 2021. Welcome. This is our weekend strategic webinar where we try to read the tea leaves, for a better choice of words, and try to figure out, what might happen over the next couple of days, maybe the next week or two, because we're really looking short term here till the end of the month, as I mentioned on my previous webinars, which is the end of the first quarter, March 31st. Okay. I'm not really, pushing beyond that based on, till we see things developing. Let's just put it that way. Full disclosure, this is purely for financial education, not for any solicitation or advice. The other disclosures that I've been adding lately is options is risky business. So unless you're ready to embrace risk and understand your own risk parameters, then please do not be an options trader. Options is risky business, very volatile, high risk, high rewards, and we all know that very well. Stocks are too, but options obviously move at a much higher pace, speed. On that note, these sessions are recorded and uploaded within 20 to 25 minutes right after we get done directly on the real-time Twitter feed. So anybody out there who wants to listen to it before it lands up on the YouTube channel, Real Estate Trading YouTube channel, which could be tonight, if not by tomorrow morning, then they don't have to wait. They just click that link and they listen to it. So that's it. All right. So we have 3 mics here. I love it. My good friend Mike Harrington just right. All right. So let's just get into this. I don't want to keep on rehashing the same things. Listen to my previous webinars. Most importantly, please look at every single post on the real-time Twitter feed, specifically on Friday when I was very engaged when putting things out there, putting out Twitter broadcasts and such. I've been doing more audio broadcasts, as you know, starting to test out some podcasts, which I think will be fantastic, or because it'll be more in some of those podcasts that I'm trying to do will be, talking directly to members, specific one-to-one type of interactions. They ask me tough questions, I answer, and I think it'll be a fantastic addition to the resources that we provide here at Real Estate Trading. But most importantly, the Friday, I went deep and tried to explain blow by blow like what was going on. I explained that before on my previous Wednesday webinar, and of course the market panned out very, very well, which really means nothing going forward. But that reflex bounce was coming. I was expecting it to happen on Monday. Instead, it happened on Friday, for technical reasons, as well as the fact that the open interest on the SPY options expiration, weekly options expiration, the calls and the puts were skewed towards the markets going higher. And of course, the markets just went nuts overall. Okay, not every stocks came back, but the NASDAQ is still, floundering around. Okay. Couple of quick things here behind you as I speak is one of the most important indices that the market is very focused on right now, which is the NASDAQ, which includes big cap growth growth stocks, technology stocks primarily, bunch of biotech stocks too. So keep an eye on that as we speak. This is a chart that I posted on Friday too, showing in very simple in a very simple manner on previous big corrections we have had since the COVID bottom on March 23rd, other big corrections we have had, and this and the current one that we are going through is right here. Okay, so you can see the similarity, like without getting too detailed and stuff. On my Twitter feed, I put the, I highlighted the deep oversold stochastic levels, and this looks like a triple bottom similar to this. Pattern symmetry is important. Patterns do replicate themselves in the market, primarily because the markets are driven by machines, right? So they do replicate patterns. For whatever reason, the market is going through a corrective phase. Okay, and the same thing happens when the markets are going up in waves higher. But when the corrections happen, as we all know, they are very fast, they're very violent, and they're very furious, because regardless of whether it's the long-term bull is still alive. It's cracking a little bit, but it's still alive. But the fact is that given the level on the markets, given all that stuff, anytime there's a little hiccup, in this particular case, 10-year government bond deals, screaming higher, at least the rate of change screaming higher, not the actual level, triggered off a derivative crash. Now, what does that really mean? A derivative crash means, remember, the bond market is 10 times, I'm just picking a number, it's big. It's 10 times bigger than the stock market, all right? People don't realize that, the fixed income market. So when the credit market's like an iceberg, the top of the iceberg is the equity market. The bottom of the iceberg, the 3/4 of the market the 3/4 of the ice lies, okay, is the bond market, is the fixed income market, the credit market. So bottom line is the credit markets are holding out fine, but the fixed income market, when the yields are moving like this, what do you think is happening to actual bond prices? Anyone know? Okay, I won't waste time, I'll answer it. It goes the opposite way. Bond prices go down, yields go higher. So there's a lot of margin calls also. Keep in mind, just like stocks, happening in the actual bondholders, institutional bondholders, and they're getting creamed. And there's a lot of hedge funds again, and there's a lot of institutional money managers who owned a lot of government bonds. So when the prices are collapsing in government bonds, and the yields are rising, okay, that's how it works. Prices go down, yields go higher. So yields are shooting up pretty fast, not in the actual level, but the rate of change, the way it moved, okay, from like half a percentage point up to $1.50. I mean, that's a 200, that's a three bagger, right? If you're looking at a stock, goes from 50 cents to $1.50. You have to understand this stuff, so it helps you with your overall understanding of the market and your overall money management and stock and options trading whatsoever. These things are important. People don't quite understand that. So bond yields are rising, bond prices are falling sharply. So what do you think is happening? And the bond market is very leveraged, meaning there's a lot of margin there, right? So it happens in every asset class, whether it's stocks, whether it's homes, real estate. If your margin's too hawk, you got a huge mortgage, you paid no money down, and you bought $1 million house, $500,000 house, market collapsed, you're done. So bottom line is that the same thing is happening with the bond market. So that's one of the reasons why, as long as the bond yields go up somewhat smoothly instead of a 90-degree angle up, then we're fine. And I repeat again, then we're fine. However, if it keeps on doing the 1.6%, then it jumps to 1.7, lands up at 2%. And listen, we're not bond analysts here. I look at the charts, understand the concept. That's how that's why I'm saying. Then obviously the market can't go anywhere, and you're going to have these flash crashes and reflex rallies, and you just got to live with it. That's the way it goes. Okay, it's not going to put us in a bear market, that's for sure. Because bond yields going higher is also telling us, just so you all understand, it's also telling us that the U.S. economy is getting stronger. The U.S. economy is getting stronger. We just got the $1.9 trillion. That's huge. Okay, thing passed. A stimulus bill passed. Markets were very nervous if it passed or not. Now it goes back procedural thing to the Congress, to the House. The House signs off, lands up on President Biden's desk. He signs off, and all this will happen on Tuesday, because Tuesday the House, the Congress basically goes ahead and signs off on it. There was a lot of hand wrangling on it. There's a lot of sausage making, as they say in DC. That's standard procedure. It got done, and a lot of money is going to be pumped into the U.S. economy, which on a short-term basis is fine. On a longer-term basis, you can't be doing $2 trillion stimulus bills, all right? But this is it. President Trump did a fantastic one. What was it? 900 billion. It's 1.9 trillion, and this covers a lot more sectors of the economy. Just so you know, covers airlines and covers the railroads, covers a lot of stuff. So anyway, so the bottom line is that net, that's a short-term positive, net, and certain sectors will benefit tremendously, especially the reopening. Hospitality, airlines, these things are the biggest beneficiaries of that. Retail, $1,400 checks for people making less than $75,000, and that's a lot of people are going to get it, because most Americans don't make $75,000. right? Exactly. Does anyone know what the average median income of the United States is? It's kind of shocking. Does anyone know? You guys we're all Americans, right? Do we know what the average median income of a family of, let's say, 2 or 4? Does anyone know? Mike, Miro, Sue, Mr. Lucas? None of you guys know?
Oh, it's about, I don't know, 50,000?
Yeah, you're pretty much right. It's around $46,000, which is terrible, but that's the truth. And you guys didn't know? Wow, you guys must be like billionaires or something. So okay, so think about it. So a lot of Americans are going to get help with this stimulus check. There's no question about it. Okay, you're right, Sue. It's a little. I think the number is slightly less than 50. So that's just the way it goes, and that's the median income, average income of a average U.S. household. Okay, so saying all that, those are the things that are happening right now. Oil prices are shooting higher again after hours, primarily because Saudi Arabia announced that one of their offshore terminals was under attack, but they supposedly, they managed to shoot down the missiles and stuff from whoever was, lobbing them out there. So there's no disruption in oil, but oil is up. Okay, oil is up after hours, and so oil stocks will also be a beneficiary of that, and they've gone up, quite a bit, obviously, lately. So, okay, so let's get into the charts. I want to keep this reasonably short. There's not too much analysis to be done. This is really a very technical market, and that's the only way we can play it. Some traders who got back to me, DM'd me and stuff the latter part of the day. Some of them did extremely well because they bought those technical lows of the dip in the morning, all the charts that were being pushed, that were being pushed onto the real-time Twitter feed. They took advantage of it. They had a couple of their own choices. They picked up some of my other trades, and stocks turned around big. I mean, stocks turned around big. Even though I didn't recommend Amazon and stuff, just to give an example, Amazon alone went up $122 from the bottom, from $38.80 to $3,010, more than $122. The same thing happened with Netflix, went up 17, just to give you an idea. So people who are tactical traders, have some cash on the side, actually probably have them on some of the best days. Best day, on the thing, regardless of the fact that on the current positions they were in, they could have been down, but they make that all back up on these vicious rallies. That's how tactical traders can make a lot of money. This is, after all, about trading, not about sitting and hoping and waiting and, oh, will this happen? Will this happen? Will this happen? Because by the time it happens, if you're not in it, you ain't gonna make it. So, so days like Friday, some of these tactical traders made a ton of money. Give you another example. Facebook went up from $255. I'm going to keep on switching the chart. So this is the NASDAQ chart, mind you. Very, very, very critical chart. Screenshot it, print it, do whatever you want. Keep it there so that, because I can't be updating this every 5 minutes for you all. I do it every like half an hour or an hour. This is very critical. This is exactly what the NASDAQ is going to do. These are the levels it's going to follow, and that's exactly what happened. Give an example on Tesla. Okay, Tesla went from $539 at the bottom to $627. That's almost $90 turnaround. $90 within a few hours, mind you, within a few hours, because the market turned right off that beautiful long tail of the falling wedge, the long tail hammer, which started at 11 a.m. on Friday. So imagine you caught it like not at 5:39, because things move at that point. It moves ferociously fast, like seconds. Let's say you bought it, you managed to get in some options, or bought the stock. Okay, bought the stock shares at let's say instead of 539, let's call it 550 or 560. You could have made $60 on your money. $60, because this was a continued expansion, and expansion candles are, you can hold on to things when they're moving like that. And this is a 1 hour chart, and every hour this is what the Nasdaq did. Give you another example. Square went from $191 at the bottom to $218. Sorry, 222. That's 31 points in a few hours. Literally a few hours. 1 hour, 2 hour, 3 hour, and 4 hours. Okay. So I don't want to keep going on and on, but just giving an example. I'll give you another one. I'm talking about these big cap movers. Shopify, for example, went from 1,020. This was probably one of the biggest ones, to $1,154. From 1,020 at the bottom of the flash crash collapse, where everybody gave up. Okay, and we were selectively buying. Our ones went up too, but I'm just showing you many other stocks that we have traded, and you could easily, look at these big monsters, and it went from $1,000, 1,020, to 1,135. Sorry, what am I saying? It went to, 1,135, because it opened at 1,150, 1,154. So you got, to be exact, you got $114 turnaround. So even if you caught $50 of that, you'd be feeling like a king. That's what trading's all about. I don't care whether you trade stocks or whether you trade options. If you're trading options in it, you just made a bundle on it. If you sat around and watched it, well, did nothing. That's why cost averaging, whether it's a stock, whether it's an option, specifically in options, on these type of climactic bottoms, we hope, okay, are huge winning strategies. You could have made your month on it, made your week on it. Okay, enough of that. So then I want to highlight that because that's very, very critical. Now this is, let's start off with the first chart that I was showing you. So here is the QQQ. The biggest winner, the biggest sector on Friday was what? What was the biggest gainer sector or index? Was what? Come on, guys, somebody step up.
The SPY?
Okay, you guys are definitively, and I love you all. That's why I'm saying it, because I always said I don't entertain ignorance. Okay, you're definitely way out of the loop with the markets right now. No, it wasn't the SPY. It was the IWM. The Russell 2000 was up more than 2%. It was up a lot. Those options, which went to 16 cents, 16 cents at the bottom, went to $1.57. So the fact, and it's not like I'm quizzing you on something that I didn't put out. I put it out repeatedly on my real-time Twitter feed. So obviously many of you are not following it. So I highly suggest as a friend that you guys follow it, because obviously people are a little bit clueless about what's happening in the market. It went up 900%. Now, when it went to 16 cents, I have no clue, but I remember buying a whole bunch of them around 30 cents. And that's a 300% at the close. At the high, it was $1.60. It closed at $1.05. That's 300%, ladies and gentlemen. Okay, so again, so this is the Nasdaq. This is the Nasdaq. You can see these corrective phases. Everybody gets phased out. It's the same emotional reaction, same reaction. There has never been one single time in US financial history that human traders haven't had the same reaction. And the reaction during corrective phases, especially when the hardcore stochastics are seriously bottoming and they're trying to go up, then they rebottom again and they rebottom again. And we'll probably rebottom again tomorrow. to be honest with you. Okay, for all I know. I don't know if we're going to test this, but a little bit of a pullback, especially when you look at the 1 hour chart, very, very likely. And there's nothing wrong with that because that's standard procedure. As long as the directional bias of the internals don't change, the markets will still go higher to certain levels. So the bottom line is every single time this happens, the actual behavioral reaction of a human retail trader is the same: disgust, despair, and despondency, the 3Ds. Okay, completely like, no, man, this is it, it's all over, everything. And that all over is pretty much when the market technically tends to have a short-term tradable bottom. That's exactly what happened on Friday. So the human emotions never ever change. I know it, I feel it, I'm human. Last I checked, when I'm trading, maybe I'm not. Do I feel like crap? Sure. Do I give up? Never. You know, so bottom line is, this is what happens. And this was back in September 2020. This was back in October 2020. This was a mini flash crash. We've had quite a few of those. This was in November, but they don't have the same structural symmetry as this. And this is the one that we have gone through since the 16th, right after Valentine's Day of February. And this is where we are. Can we hit lower levels? Sure we can. But what I'm looking at here is that we have it certainly is a triple bottom, quite similar to what happened here. And let's see if that pattern plays out. We do have some positive catalysts here on the way with the stimulus bill, with the overall, and the deep extreme oversold conditions. Next chart is the Dow Jones Industrial Average. This is a shorter term chart. This only goes back, ladies and gentlemen, to the 24th of 24th of February, obviously. This was the high, 32,036. I believe that was the high. Yeah, that was the high. And this is a very, very simple chart to track. You guys can easily construct this on your side or take a screenshot, and you can see the exact levels where the selling comes in, where the buyers come in. This was a massive, extremely positive. This was a massive bullish engulfing, reversal candle right off the bat on 5, 6, 7. This was Thursday, actually, right? What day was the 4th? What day was the 4th? 4th was Thursday. So this actually is Thursday. Okay. So we had that. These are Dow Jones Futures, 2 in the afternoon. This was the 11 o'clock turnaround, a dragonfly candle, which is the same as a reversal hammer. It's also known as a dragonfly because that's what it looks like. And then bang, 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 bang. And large cap stocks, obviously carried the movement forward. A lot of healthcare stocks were up quite a bit. I didn't get a chance to really, get into them or post. I was looking at Anthem, Humana, United Health. These are stocks we made a lot of money on a year ago. Those things were on fire. URI, one of my recommendations, United Rentals, URI, was up huge. It was up $13 because they are the huge beneficiaries of this reopening of the United States economy that is happening in full blast right now. To give you an example, as traders, URI opened at 293, crashed with the market to 282, and went to $302. The high on that stock is 321, and we are still long that stock. That stock is the ultimate play on URI, United Rentals. Don't know what that company is? Go look it up. They rent every single piece of industrial machinery that you can think of. Okay, and also big in the oil industry because they rent a lot of the big rigs and all that stuff. So anyway, so URI was another huge one. So that's a part of the Dow Jones Industrial Average, and you can clearly see, what happened. It came back and retested actually And the Dow was up the most, right? Obviously, 572 points. At one point, it was up 640 points. NASDAQ was up too, could have been higher, was up 196 points. The Russell 2000 was the best performer, up 45 points to 2192. And the IWM, like I said, calls were up fantastic. And of course, the indices was the biggest one, up almost 2.3% at one point. Okay, if you want to see a quick longer term picture of the Dow, will it show me the futures? No, what's it doing? This is where we are. Okay, very choppy action, quite similar to what happened here back on, because the indices now are not totally correlated. NASDAQ is doing one thing, the Russell 2000 is doing another thing, the Dow Jones is doing another thing. And the reason I mentioned repeatedly that the Russell 2000 is going to, is the ultimate beneficiary, and that's the reason why it was up that much of the U.S. economy opening. And if somebody cared to, read my tweets and focus a little bit, they would know the reason behind that is quite simple. They are primarily U.S. small cap based companies which derive most of their revenues and sales from the United States. As the United States economy gets better, they tend to do better. And it's a wide variety of stocks in there. Lots of regional banks, lots of small biotechs, lots of, that's why it's called the Russell 2000, right? 2,000 stocks in the indices, much more bigger basket. So a lot of them benefit tremendously, regardless of what the NASDAQ is doing or what some of the big caps are doing on certain days. Okay, next chart. The NASDAQ again, except this is zoomed in view. This is the 1 hour chart. These are previous gap fills, and that's why they're shaded in green. And to be honest with you, I have no idea what it's going to do. If for example, the bill, let's say, for example, the biggest enemy of the NASDAQ right now, or high growth stocks, is the sharply rising 10-year government bond deal. If the 10-year government bond deal tends to spike again, then expect it to pull back towards these levels, probably kiss this line here, this downtrend line. I do not think we're going to see those horrendous lows at 298. And if we do this time, please don't sit around like scratching your head wondering what you're going to do, what you're going to have for lunch. All right, get into it hard, in my opinion. That's all. And a double bottom, this was a double bottom, I would say. If we get a triple bottom, then if you have cash on the side, if you need to reallocate, some people say, well, I really don't have cash on the side. Well, okay. How about look at this as a trade, as one of the strategies? Let's say you were in a stock which really is not doing anything. It is not going to bounce when the market bounces, and there are stocks like that, okay, or some other thing. Why not sell that and use that capital? Because remember, the money that you have in stocks or options, this is your working capital. That's the fertilizer you need to grow the plant. So why not shift out of it? Take that frigging loss and run with the other one, which will make you, 50, 60, 70, 80% on a certain day, while you're sitting there looking at this thing, which is stuck in the mud for weeks, saying, oh man, what am I going to do with it? See, that's my theory, because we don't have limitless amounts of money. Okay, I'm sure some of you guys do. I don't. All right. So the bottom line is that I want to utilize my money, what I have in front of me. If I need to shift out of a position, I'll shift out of a position. I'll take that loss and make it 3 times more on the other side. I've done that before. I always have some cash on the side, so I tend to, take advantage of the situations. But even sometimes when I'm more fully invested, I will shift out of a position to make money in another position. This is not rocket science. It's not rocket science, ladies and gentlemen. You're all grown people. You know exactly what I'm talking about. If you take it from a non-producing asset, put it into a producing asset, and make money. Okay, next. If things do work out, then we are looking at this level to be hit, and my real-time Twitter feed, if you guys, again, try to focus a little bit more for your own benefit, not mine, all right, is, and with all due respect, I put arrows and stuff like that. So on the actual Twitter feed, this chart is more dressed up. It's got the sell arrows here. This is a major downtrend line. You can certainly expect some selling at this point, but structurally, What this looks like, if it has, it needs to basically break above that. There could be some shimmy shammy back and forth tomorrow morning, to be honest with you, because the final bill gets passed and signed Tuesday, and then I think President Biden signs it on Thursday. I don't know, but it gets voted on Tuesday. So the markets are obviously going to be a little bit nervous, like, okay, what if there's some, opposition on the what do you call, on the congressional side, on the House side? What if the bill doesn't get to the president's desk? There's always those questions till it happens, right? But like they say, buy the rumor and sell the fact. So it's pretty much, what I think. So whichever the case, it's a massive pump of liquidity into the U.S. economy, and certain areas of the market, like I said, transportations, reopening trades, and I've mentioned those quite a few times, or a few of them on my real-time Twitter feed. They'll all benefit, no question about it. Okay. So that's it. That's what the chart looks like. It's a very technical chart, nothing that difficult to understand. The lines are drawn off the supply points, i.e. where the sell programs come in, where the algos hit the sell button, and of course, these are the buy points, where the long tail hammer kicks in, the algos kick in. This is the range we need to enter right there, and that range is 324. And why was this line drawn? Because of the fact that this was a major pivotal turning point, and that was back on the 15th of January 2021. I don't just randomly draw lines, okay? Just remember that. And anyone who's going to be listening to it later, they might wonder, like, he's got a lot of lines in there. Yeah, I do, because these are the major supply demand points which tell me where the programs are going to come in and hit. And you can manage your trades accordingly. Let's say you bought it around here, and as it's approaching this level, you might want to take take some partial profits and get out of that trade for that moment, because right there could be a sharp sell program that comes in, because that's a major barrier. So we need to cross over 310.76. We got the next level to attack, which is roughly where the downtrend line is, and the gap fill, the previous gap fill from here, from the 23rd of February, and that's around 318. And people who trade like this generally tend to make a lot more money and lose a lot less than the ones who are just looking at the overall indices, listening to the screams on Stock Twits and CNBC and other financial networks, and just playing complete havoc with their brains. People who trade these kind of charts tend to normally stay calmer, make more money, lose less, know where to cost average, and react accordingly if things go dramatically wrong. Next. Beautiful chart of the Russell 2000, going all the way back to the COVID-19 lows, March 23rd, March 20th. In the case of the Russell 2000, we have a major. I forgot to draw one more line here. Let's see one thing. There's a lot of indicators you use. I primarily use the stochastics as one of indicators, and I look at, believe it or not, I look at 32 different indicators on all my different screens. But I don't want to sit here and go through that. It'll be like 3 hours of me rambling on, and none of you guys ever want to sit through that torture. So beautiful, nice fat turn, very nice. That obviously correlates with what's happening on top. Here's your broad channel. This is your broad channel, okay, from the COVID. This was the acceleration channel that started on the 30th of October, right around Halloween. This is your acceleration channel. Let me make this a dotted line so it looks a little bit easier. There you go. There you go. Okay. If we didn't have the 10-year government bond deal, the little, spike, the Russell 2000 at this point would have made a new high. Okay, so regardless of what didn't happen, let's see what is happening. So we fell here. There's a major bottom right there on the 29th, and that's pretty much where it went. before it turned around sharply. And look at the length of this, look at the length of this tail. So what I do, and if some of you are inclined to learning a little bit more about pattern recognition, and remember, it's not just about learning, it's applying what you learn. I look very quickly, my eyes scan very quickly to see when was the last time we had such a sharp reversal of the lows of these flash crash lows, and I cannot detect one. And I don't want to go too far. I want to go back to October. Or if I want to go too far, let's see here. When was the last time? Even during the COVID crash, we did not have this type of reversal. This reversal was humongous, and not just for the Russell, for all different stocks that I mentioned earlier on, the $110, $115 turnarounds. Those things don't happen. They happen once in a blue moon. So that means some significant short covering, i.e. institutions bought back, some short funds covered. That means they bought. So there was a confluence of things that happened, which has to be taken into account. So when I look at it, I don't see it. I don't see a tail that long, that reversal, that type of reversal on one particular day in 4 hours, not from the morning, from 11 o'clock in the morning till 4. So it's a very nice move. Obviously, we're going to find some resistance at around 221. And let me just put it this way. These calls are damn cheap. All right. The what do you call it? The March 12th calls, they're at $1 and change right now. So if this thing pans out, let's say by, and hits the best case scenario short term this week, I'm looking at 225. That's why I have the 225 calls, which are $1, which could have bought it at 16 cents, 20 cents, 30 cents on Friday. Really, exactly. It's like buying a biotech, a little monster, or a what do you call it? A Bitcoin penny stock at 30 cents, and it goes to $1.57 in 4 hours. This is not the first time it's happened. Yes, it's the first time it's happened that fast, that quick. So anyway, so 221. This is a consolidation flag. This is still technically speaking, this is still a bull flag. Primary trend is still higher, in between corrections, of course. The acceleration channel was broken, support still held, and we are still within that flag. So if the flag works, then I would be looking at 225. By the time these calls go to 225, let's say over the next 3 or 4 days, after shimmy-shamming around a little bit, those $1 calls will probably be $4, 300%. 3-bagger and 4-bagger, that means you make 3 times your money. Okay. And if it doesn't, it's going to slip here back towards 212.74. The charts are there. You guys, I don't need to spell out the numbers. What's the next chart? Next chart is the actual S&P 500. We were up about 24 handles when the Globex markets opened at 6 p.m. First thing I check at. So we were up here. That's the candle. We have given back, and now we are down 5.5 points on the S&P, primarily because bond yields are rising. But what happens really in the after hours market at this earlier stage at 9:43 p.m. really means hello beans. It means nothing. Okay. So whichever the case, this red line is the 50-day moving average. We had lost it. I told you guys, I posted it several times, that when the 50-day, and this has happened every single time, doesn't matter what, for what reason, what crisis, you lose the 50-day moving average, you bounce back, you reclaim it. We reclaimed it with a very bullish green hammer, which is a positive. And if we completely lose the body of this candle tomorrow, which I really hope we don't, okay, which means we go below 37.65 or 37.66 on the E-minis, then we will thump lower, not just retest this at that point, 36.52, 36.55. It's like 1,000+ points more is visible. Just letting you guys know. Now, do I know exactly what it's going to do? Exactly? Nobody knows exactly. I know the probability. The probability is that we have a double bottom here. Very similar to previous times. And when you get a double bottom stochastics, even if it zigzags around a little bit and doesn't completely cross down, then there is a higher probability that after a little pullback in the morning, whatever the case may be, the markets will attempt to bounce higher. So far, this is a megaphone consolidation. Megaphone consolidations are tricky because just like a megaphone, they expand lower and they expand higher. So the key is that the last couple of times, well, this was actually more also a megaphone type of expansion. 1 second, let me fix this. She wants you train your eyes to look at charts, and I'm not saying you have to look at it the way I look at it. You probably have a better way of looking at it. But once you start looking at the market in this type of matrix, you tend to be a better trader, stay more calm, not make irrational judgments or actions, take irrational actions, and it just saves you more money. That's all. That's pretty much it. So this is where we are. All right, here's your rising wedge. We're testing it right there. And like I said, if we hold these levels, here's a nice support level, which was the support level from the 26th. So once these supports hold, and this is the point that I want to make that all of you guys understand. Just because the support breaks temporarily, you have to see what's happening underneath the surface. Because these are solid internals, which are telling us how deeply oversold we got. And we got a serious reflex bounce, which I said repeatedly. It happened quicker than what I thought. So just because a support level doesn't hold, doesn't necessarily mean it's not going to reflexively reverse and bounce. Just remember that, because this is not the same market that was 15, 20 years ago, or even 10 years ago. Instantaneous resets, technical resets from overbought to oversold happen within days, which normally took weeks or months. And many traders to this day don't seem to accept it. What took days now happens in minutes. What took weeks now happens in hours because of the speed and rapidity of super fast black box computers and algorithmic programs that are run through those computers. It's really as simple as that. It's not rocket science. Okay, technology has speeded up things. So the more vicious the correction is, or the more vicious the rally is up, the quicker you're going to get a reflex bounce, an opposite reaction. So if you fall like $800 one day and you're like, it's all over, well, you can bet that you can make a ton of money then within the next 24 to 48 hours, depending on the charts, of course, that you're going to get a 50% retracement and make a ton of money, like a bunch of my traders, bunch of my tactical traders did on Friday. And that's not the first time they did something like that. Okay, what's the next chart? Next chart I want to show you all is it's the one that I've mentioned before. It's called the New York Stock Exchange Oscillator. Mr. McClellan, his father created this oscillator. This oscillator is used by guys who make $1 billion a year playing around with their hedge funds. Okay, seriously. And so Tom McClellan was on the other day. I don't know if any of you got a chance to catch it because I did post it on my Twitter feed. He's coming on. He was just there for 5 minutes. And he said after a little bit of slipping and sliding, and he's not some like little trader like us, he doesn't even manage other people's money. He just looks at the market in ways like it's unbelievable. And I'm sure he's very wealthy. So his son, Tom McClellan Jr., is the one who's who's now in control of the McClellan Oscillator. He doesn't sit there and tweak it every night. It's a standard formula. It works. This is your New York Stock Exchange oscillator. This is what happened. We have let me just get a pen here. There. And please feel free to ask me any question while I'm talking, because this is for your benefit. Okay, forget about the numbers and stuff. Just look at it visually. Be a visual trader for a change. All right, forget about the numbers. Every single time the markets got to these levels, deep, hardcore, vicious, gut-wrenching, fast sell-offs, flash crashes that we call it. Okay, in these 64, 57 range, just look at it visually. This was obviously a lot deeper. When you get towards this, like it gets that deep, forget it. You could blindly make money. I'm not kidding. You could blindly make money over a day or two, because the bounces are so severe. You just sit there and watch the screen like, oh shit, why not buy anything? That's exactly what happens. And by the time you decide to buy something, it's already overbought. Don't blame me, blame the machine for the speed and rapidity of what they do. So this one, this is the recent one, right? From for this year, for 2021. Look at the pattern symmetry. These things don't lie. Remember, traders lie into their head all the time. People on TV lie all the time. They're talking their book. Well, they have no freaking idea what they're talking about. They just make up something and just say it because somebody else is going to listen to it, right? These things don't lie. They're actual numbers, facts, not fiction, right? Like I said. So look at that. So if this is the case, then we should get a bounce at least towards the break-even level, which is 0. And if things do work out, we're going to get a hump like this. And this hump like this means that these stocks, which are off 15, 20, 18, whatever percent down from the highs, will literally be kissing close to their highs. Now, this will only happen if the 10-year government bond deal relaxes, chills out a little bit, and the other factors that I mentioned, the economic factors that I mentioned before, come into play. But look at it visually. You have the full stochastic still turning, and even that thump that we got on Thursday was the big thump. The McClellan, the full stochastics, and this is refreshed on my for me around 5:30 or 5:40 in the evening. So it's not like it's not like something that's updated like all through the day. Even though you can track the McClellan oscillator, not this chart, McClellan oscillator 20, on your during trading hours, on your platform. So this didn't even turn. I said, that's interesting. It just got a little bit down. You can see that very clearly. Even though we had a pretty vicious, pullback. And this continued higher. The RSI is now turning. And the best part is the MACD is just turning. Now these things have to turn, and by the time they turn, they move really fast. Really fast. So let's erase all the drawings. Let's go back to normal. Okay, there you go. So see? So when it gets like this, and this is not the first time I mentioned this, obviously. Is this the first time you guys hearing about the McClellan oscillator from me? Yes or no? Yes or no, ladies and gentlemen? Come on, we don't have all night.
As a new subscriber, this is the first time I've heard it, but like I said, I'm a new subscriber over 2 weeks, so.
Yeah, but I've mentioned it about twice in the past 2 weeks. So focus a little bit more, Mike, okay? I like you a lot. I'm just saying that. I've mentioned it even on the last webinar and the webinar before that, okay? So anyway, but anyway, you'll hear more about it, especially during extreme circumstances. I have always talked about the McClellan oscillator, and you have seen this on my real-time Twitter feed. That's why I'm begging all of you. Actually, I don't beg. I only beg to God, okay? Is that you guys are really unfocused. I don't know what you're doing, all right? Because I'm putting out some serious stuff. Whether you act on the market or not, that's not my business. But I put out this chart at least 3 times in the past week as the markets went very turbulent. So it's not the first time you're seeing this chart. And that applies to all of you. Okay, just asking you as friends. So bottom line is that that's it. Now let's look at this on a weekly basis. Let's clean out this what did it do? Okay, sorry. So let's look at it on a weekly basis. That's daily. And the weekly looks pretty damn good. Slipping and sliding here a little bit, so it looks like it might want to go down a little bit more. But this is the best part. Look at that. It hit a double bottom from November of 2020. It hit a double bottom of 61, now turning. So the weekly is telling me there is juice to go higher. And this has nothing to do with intraday movements and people losing their heads and saying it's all over. This is to do with taking a telescope and looking out and see if, if there's, if the terrain's okay to go on, right? So looking pretty okay. If this was turning down, then I would be far more dubious. Anyway, just explaining to you all different facets. All right, let me show you a couple of other quick charts. These are more vibrant, they're more exciting. So here is a great trading chart, hourly chart of and this one I posted too. So I repeat, I'm not going to even bother asking if anyone's seeing that. But if you haven't, then again, you're not focusing. You don't need to focus. You just to look. That's all. Just kidding around with you guys about focus. Okay. Here's your yellow line is always the pivot. Here's your consolidation channel that started off on, I can actually push it back a little bit. There you go. That started off on the 10th of February, which seems like, whoa, that was like a month ago. Okay. Very nice moves. Once it gets to the bottom of the channel, you trade it to the top of the consolidation channel. It's really not rocket science. And this was the move on Friday because it fell out of the channel, retested. These lines are not drawn by me. They're automatically populated by Quad. This is which uses bar chart as their charting platform. QUODD is this particular platform. Mentioned it before too. So it got really oversold. Now it's moving higher. Still has room to move higher. Short term, it got into overbought territory, but the slow stochastics, which is more the swing trade type of picture, it still has to go and get seriously overbought. Once it gets seriously overbought like that, and it's not just the IWM, it's standard procedure with all asset classes and stocks, as you all know. Let me change the color. Overbought, overbought. S stock, slow stochastics. Overbought, overbought. So somebody who knows nothing about the stock market could trade these charts and make a decent sum of money just by looking at this. It's like a coloring book. Join the dots. Overbought, 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 overbought. This acceleration, obviously, it stayed overbought from February all the way through March, right? Look at that. And this is very strong. And it might happen. We might get overbought and keep on, moving sideways over 80, RSI 80 or stochastics 80. And in that case, you're going to get one of these type of channels. Yes, there'll be quick pullbacks for 15, 20 minutes. Bang, they'll buy it. But I don't know if that's going to happen. But I will tell you, the ferocity of this move has to be respected. And of course, the Russell 2000, as I've mentioned many, many times and repeat again, is the biggest beneficiary of the US economy reopening. Nothing else to explain. Gets towards the upper end of the channel. Again, 225.68. Make a very decent sum of money. You sell and wait to see what the reaction is. It might bust out for all you know. Might bust out. I don't know. Next chart. Let's look at this spot. I showed you guys. I don't want to show you this one. It's all there. Let's look at the. This is a good one. This one I showed also on my Twitter feed. Not going to ask if you guys saw it, because otherwise it did. Acted on it. Made a lot of money. Here's your pivot. Above pivot, good. Below the pivot, bad. We slipped for a small instance for a couple of hours on the 4th, and this is what it did. A beautiful hammer exactly off the same level with where it turned from on the 10th of December 2020, right there. This is a daily chart. This is a daily chart. It could have slid. Here's your uptrend line going all the way back to September of 2020, which is a pivotal mark for the NASDAQ. We talked about it in the last webinar. So it could have slid all the way and retested 288, in which case, there would be like heads would be exploding, literally, right? Of retail traders like, oh my God, this is it. It's all finished. Nobody's ever going to buy a tech company ever. But it didn't do that. It hit this level, and now it's bouncing. A beautiful hammer, very long tail. Looking back, when was the last time I've seen a candle like that? I haven't in a while. It's not there. There are small hammers, but not a hammer of this magnitude. What it's telling you in simple terms, it's some big money covered, big money bought. They said enough is enough. Things are getting a little too nutty. Things got a little too cheap, and we're going to buy. And that's what they did. Generally, a long tail hammer like this will have a continuation phase. That continuation phase, don't expect it in the first 5 minutes of trading. It's a continuation phase over the next couple of days. So where could it go? Here's your 50-day moving average. It's a long way off. I repeat again, my previous webinars, most recently as the last one I did. The further you move away from the moving average, the highways that the market likes to travel on or close to it, the further you move away on the downside or the upside, you are going to revert back to the mean. It's called mean reversion. This is a mean reversion play on the NASDAQ in progress. Period. Bar none. Now, some stocks will move faster. Some stocks will move slower. Talk about tech stocks. But it will revert back and try to kiss the underside of the 50-day moving average, which is at 320 on the QQQ. That's a long way off, ladies and gentlemen. And don't expect another candle like that. Shouldn't say that. I've seen it happen. Gap up, gap and go, gap and go. Happened back in November. Gap and go. You think most of you weren't feeling the exact way you're feeling now? Well, most of you might not have been, because I'm trying to brainwash you guys in thinking in a different way. But most of the market was, most of the other guys were, it's all over, it's all over. The screams of it's all over. And then gap and go 3 days in a row, bang. So this was the first one. I don't know if we're going to gap tomorrow. Most likely not. I can't tell from now. But we're going to retest somewhere close to this zone, and that's a lot of money. That's a lot of money, because at around this level, if it gets rejected, this is what's going to happen. That I can, okay. Zigzags its way, hits 317, close to the 320 mark. That's the 50-day moving average. Then another slide down. And that slide, who knows? Tries to bounce a little bit, fails, then comes down to the 290 level, which is the retest of this uptrend line, and it can very well happen. Now, what's the probability? We go by probabilities. We don't know exactly, nobody knows exactly what's going to happen. So saying all that, every single time we bottom like this, every single time we bottom like this, and we are bottoming like this, and the bottom can be slippy and slidey, just remember that. We bottom like this, it bounces, and it tries to get overbought. So if that's the case, this is where we're going. You can't go any, remember one thing, you can't go below zero. I'm not talking about your account or your brain. I'm talking about the actual indicator. You cannot go below 0. So if you look at these 3 pictures here, you can clearly see we are deeply, extremely oversold on the S stock, which is for swing traders. Remember, just think about swing stock, okay? The stock is for faster, more active traders. We do have a triple bottom in place. So that's it. Let's take a look at the VIX. None of you guys have any questions? Everything's just kind of seeping in, like, whoa, making all sense. No questions? Okay. Great. Let me try to take this out. Well, I'm looking for, oh yeah, the VIX. I show the VIX quite a bit. This is your VIX 1-hour chart. Short term, it is certainly getting oversold, which means that it will probably bounce a little bit. That means intraday, maybe the first part of the day, maybe an hour or two, the markets will pull back. Digest the gains from Friday. So the VIX is definitely getting oversold. The chart still looks like crap. I still believe, based on my previous experience and what I've done with this particular chart, that we are going to come down and retest around 23. VIX closed at 24.66. If it hits around 23, that's a good 400, 500, 600 points from here on the market. It is getting oversold, but I don't see any signs of any type of major bounce, but who knows? These things move very fast. It is oversold here, so we might get a bounce. Where we bounce, the lines are all there to show you. Now that's your short-term VIX, the short-term movements over the next 24, 48 hours, whatever the case may be. This yellow line should be moved up here. That's the pivot. And the chart itself looks like a big, toppy head and shoulder. One major top. When the, you know what hits the fan, this is where the VIX normally goes 30. When everything hits the fan hard and you're just like, whoa, you know, right? It's a roller coaster broke, then the VIX hits 40. But 30 is a real maximum, serious, you know, and I've shown that before. Look at this. This line was drawn, and look what the VIX did. Overshot, came straight down. Once the VIX shoots out of the Bollinger Band, it always pulls back in. Same thing with stocks, same thing with anything. You cannot stay out of the Bollinger Band for more than 2 days. You can't. It's never happened. So looking at this particular chart, it, to me, overall, it looks like a M. And the M, come on. Won't let me draw an M. Oh, there you go. And the M basically comes down to around 23, which means market reflex rally intact. Remember, a W is a dragon bullish formation. We love those. And an M is a bearish formation. And this one goes all the way back to the 25th of December. I'm sorry, 25th of February. W good. And we want to see more M's on the VIX because we want the VIX to stay low, volatility to stay low, so our charts work well on the upper end, on the upside. Let's look at the same thing on the monthly, I'm sorry, on the daily. Clean this out. On the daily, there. The daily VIX is actually very promising. What does that mean? It's promising for the markets on the other side. Remember, this is a contrarian indicator. It moves opposite to the stock market. Look at this candle. The last time we saw candles of this magnitude, that means vicious upside reflex bounce on the stock market and vicious selling of the VIX derivatives by the machines. Okay? Because the VIX literally moves tick by tick. VIX goes up 1 point, markets goes down 50 points. The Dow, for example. It is so correlated, it's not even funny. I know most of you have just started to really focus on the VIX. I heard from some of my traders that, man, I really started to really look at this, really helped me on keeping my head straight and doing the right thing. I said, good. And I'm not trading the VIX because I've traded VIX options before, but they don't really pay that much. I'd rather short the SPY or go long the SPY on severe sell-offs like last week and make real decent money than try to play the VIX call. But you can do that. You can play the different, UVXY and all that stuff. Anyway, look at this. Just follow. Forget about the numbers and stuff. Just look at it visually. It blew off over the Bollinger, barring another major foreseen catastrophe, i.e. bond deals go nuts and other factors, stimulus bill doesn't get passed, blah, 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 whatever. The candle, look at the pattern. Just the way I asked you guys to look at the pattern symmetry. The last time something like this happened was around here, even though in 1 day basis, it wasn't that long. It happened here. The following day, the VIX actually went up, but created an inverted hammer. Remember, a hammer reversal, the body of the hammer is on the top. An inverted hammer, it's like a hammer, just imagine, an inverted hammer is when the selling comes in hard. It's like a hammer falling on your head, which shouldn't happen ever, right? So even though it was green and the VIX ended up the day a little bit higher, it was an inverted hammer. And if you were a patient trader and didn't just, like we call MOHTR, monkeys on hot tin roofs, jumping around, oh my God, oh my God, oh my God, okay? Then you would have made a lot of money over the following couple of days, 2, 3, 4, 5, 6 days. Look at that, till the VIX bottomed again, stochastics bottomed, got oversold. And is it possible that the VIX goes up a little bit tomorrow? Hour or two, whatever the case may be. Markets open down. The rest of the world freaks out again. We stay calm. Then it's also possible that we get an inverted hammer by the end of the day and the VIX comes down back towards 20. By the time VIX hits these levels, generally speaking, when it comes to the broader market will sell off. Between 19 and 20, the volatility index has tradable bottom. You can see that every single time. So when the VIX bounces, guess what happens? The market sells off. Doesn't mean every stock is going to sell off. I'm just saying the overall market. So far, it looks like the VIX here, this line was drawn by me just to show that it seems like we have a triple top here on the stochastics. That means the VIX should come down. Want it to come down. That's your swing for swing traders. For faster traders, it's still pointing down. But once it gets really oversold, you generally tend to get a small bounce. All right, quick questions or whatever. If you don't have any, then I gotta go. Oh, somebody asked a question on the other side. How does the VIXI compare and relate to the thing? I really don't know the answer, to be honest with you. Mike asked that question. The VIXI is basically because I specialize on thing. 1 second. The VIX, yeah. So the VIXI basically you're talking about. I'm looking at it on the other side. 1 second. It pretty much follows the same trajectory. There's this. I'm looking at it on the other side, Mike. Miro. So you typed in, but I could hear you a minute ago. Next time I just ask directly on the thing.
I didn't want to interrupt the conversation.
No problem. I did almost missed it. Then I saw it some little thing on the reminder on the chat to look at it. From what I can see, let me see here. I don't track the VIXI, but I'll certainly put it on and start tracking it. Let's see.
I've been watching it for about a month and a half or so, and it basically follows the VIX, but I was just wondering how it correlated because you can't trade like a VIXI, or you can't trade a VIX itself. So
Yep, I know what you're saying. This one is no making that.
I was just using that to see when it spiked to know that, okay, now's a good time to probably buy a little bit of it spiking.
Well, the fact is that you saw what happened on Friday with that. It's the same thing that happened on the VIX. I don't really track the VIXy, so I won't be able to answer, but it follows the same trajectory, slightly different look. That's all.
Okay, thanks.
It definitely got oversold on a 15-minute basis, and that correlates with what I just said. That we'll probably have a slightly down first part of the day, maybe an hour, I don't know. And you can see here very clearly, this is where it spiked from. That's exactly what it came down to, and this is where it looks like where the short-term bottom is. And this is on a very fast basis. It's a 15-minute basis. The 1-hour chart also is saying that around. It's a very defined level. It's nice. I'll definitely start tracking it. So basically around 1180, the markets have reached a short-term high, and then then the VIXy bounces, markets fall. So right now it's here. There's your low level. So once it gets to that 1180 level, from a trading standpoint, it's that means the markets are overbought. Let's see here. This is on a daily basis. 1 second. Actually, why am I doing it here? I would rather do it on my. Let me try to pull this up here. This is EOG, one of the best oil stocks ever.
I was just using it to see if it's stochastics.
Yeah, let me just finish something. What do you call the EOG, Enron Oil and Gas? This is not the old Enron. This, EOG. So what do you call? Look, this is what oil is doing. This is one of the best stocks out there. It's incredible, and we used to trade it. I missed this run. Looks like it's getting pretty severely overbought. This chart was drawn months ago, by the way, and it's definitively very overbought. But any type of pullback, depending on where oil goes, this is always a good buy. Let me try to put up your. Wow, look at that. Oh, the 15-minute chart, the daily nearest. So I guess all point towards that 1180 level. Wow, this thing moves, huh? When things moved, it's moved like nuts. It's got a nice trading range for quick scalps, like about $1. You ever trade it, or you just look at it?
I've been trading both options on it and stock.
Oh, wow, that's great. That's great. So it all comes down to, well, the lowest level was back in January. Yeah, it's definitely, it's getting there. It's getting there. But like I said, I really can't comment on it on a educated basis because I don't really trade the VIXy. Neither do I trade the VIX, but I just simply look at it, from a standpoint of correlation with the market. Okay. Anyone else with any quick questions? Yes, no?
Oh, Frank, how much higher do you see the Bitcoin is gonna go?
I have no idea. Bitcoin's going a lot higher. Okay?
Lot
Bitcoin,
higher than
yeah, but more than Bitcoin, Ethereum, I believe, is going to go a lot higher. And something happened with Ethereum today, where they are taking out almost 20% of the coins in rotation because they changed their network module or something. So Ethereum, I think, is a serious play. Bitcoin's obviously the granddaddy. Bitcoins can go a lot higher. Bitcoin, there's some serious institutions in it. Bitcoin, some of the biggest boys have said, Bitcoin go to 100,000. You're going to have big fluctuations, but also put Ethereum ETH. Ethereum is a financial token used in a lot of financial transactions, I should say. And ETH is something you should watch. It's a lot cheaper. It's a lot cheaper. Remember, at ETH, it's the biggest thing. It's gone for it's up a little bit more than Bitcoin, actually, if you look at percentage terms. Okay, ETH, Ethereum. So Bitcoin, remember, it's a law of numbers. As Bitcoin keeps on climbing higher, every incremental move, you're going to get a lesser return on your money. Let's say Bitcoin, somebody bought Bitcoin at 60,000 and then it went to 70,000. Okay, so basically you made 16%. But if somebody bought it at, so as it keeps on moving higher, Bitcoin needs to move in numerical terms, in number terms. You know what I'm saying? Much bigger for a bigger percentage return on your money. When Bitcoin was 20,000 and it went to 40, that was a double on people's money. From 40 to, but now it's at 50. So even if it goes to 60, everyone's like, yeah, it's great, but that's only 16%. So as it gets bigger and bigger, you're going to make lesser and lesser percentage return on your money. Obviously, it's a law of numbers. Very simple. Ethereum on the other end, read up on it, look at it, ETH, okay, which is right now, let me look on my iPhone. When TD Ameritrade and these guys let people start trading coins, that's when they're really going to fly. Like, I have a Coinbase account. I really don't trade Bitcoin. But if I was allowed to trade on TD Ameritrade, like Thinkorswim, I'd put in a few bucks, not necessarily on Bitcoin, on the others, on Ethereum. So the fact that it's only in specialized exchanges, I think, like they say, if you open up more railway stations, more people are going to, take the train. So that's pretty much the case. They need more of these big names like TD Ameritrade and stuff to put it. So Ethereum right now is 1720. It is up almost 4%, while Bitcoin is only up 1.82% right now as we speak. Okay, Dogecoin, which is Elon Musk's thing, which is a frigging joke, is up 7%. Of course it's up 7%. It's 5 cents. People are just taking all their coins from the back of the cars and they're throwing it in there. But if you want to be serious, you look at Ethereum, of course you track Bitcoin. So Bitcoin right now is up 1.82% and Ethereum is up 3.94% for the reasons I just explained to you. Read up on it. This thing that happened today, they're taking out a bunch out of circulation, is going to put upward pressure on ETH. Not suggesting, just letting you know. All right, so that's the one you should be looking at. Okay, on that note, you guys have a lovely evening. Let's brace ourselves for this week. I would think that given the extreme volatility that we saw last week, I do not see a repeat of that happening this week. Saying all that, anything can happen in the markets, but please focus a little bit on a lot of the good stuff that I put out there. You guys will find it very useful. And in the meantime, I've explained everything that my few brain cells could explain today, and hopefully it'll help all of us. On that note, God bless you all. God bless America. See you all tomorrow. Good night.
Thank you. Bye-bye.
Bye-bye.
Bye-bye.